Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Boy, is the tech world and the broader economy serving up some interesting plot twists lately. You know, the kind of stuff that makes you go, what's going to happen next?
Absolutely. It feels like we're at a bit of an inflection point in several key areas. Lots of interconnected pieces moving at once.
Okay, so today we're going to try and make sense of a few of these big puzzle pieces. We've got the potential for some major Hollywood drama with talk of tariffs on overseas film productions. Can you even imagine?
Right. That one's a head scratcher.
Then I'll zoom in on Apple, which some are saying is facing a real prove-it moment, just a bunch of different challenges hitting them at the same time.
The confluence, yeah.
And finally, we'll take a peek at some of the insights coming out of the Milken Conference, specifically from Treasury Secretary Scott Bessent. Sound like a plan?
Sounds like a dive worth taking.
Mm-hmm.
Each of these could have significant knock-on effects.
All right, let's kick things off with the movie Magic, or maybe not so magic if these tariffs come into play. President Trump has mentioned a possible 100% tariff on films produced outside the U.S.
100%.
100%. That's like paying double to see the next blockbuster. How does that even work?
That's the big question mark hanging over Hollywood right now. Really. The industry is scratching its head trying to figure out the details.
Yeah.
Like, would it apply to American companies filming on location abroad for cost reasons?
Or post-production.
Exactly. What about post-production work done internationally? It's also globalized now. You know, this outcome seems counterintuitive because so many American films rely heavily on international partners, talent, facilities. 100% tariff could just cripple those collaborations, might even reduce output.
Right, because it's not like movies are just made in one place anymore. And apparently, John Voight and his manager even went to chat with Trump about tax breaks instead.
Trying a different angle, maybe?
Maybe a little less of the economic sledgehammer approach?
Well, what's fascinating here is that the data actually suggests the U.S. film industry is a net exporter.
Oh, really?
Yeah, Barclays pointed that out. We export more in filmmaking than we import. So hitting imports with a tariff could actually, hurt our own thriving export business. And the Motion Picture Association echoes this, showing a positive trade balance for the U.S. in this sector.
It does make you wonder about the logistics, too. I mean, how do you even tariff a digital file?
Right.
Do they charge per gigabyte? It just seems complicated.
Very.
But if it does happen, it could really shake up streaming services like Netflix. They invest so much overseas.
That's a crucial point. Suddenly, those international shows might become a lot more expensive for us to watch.
Yeah.
It raises a big question about how these tariffs would even be applied in the age of streaming and global content libraries.
Okay, shifting gears from the silver screen to Silicon Valley, let's talk about Apple. There's a lot of buzz about them facing what some are calling a make-or-break moment.
It sound dramatic, maybe?
It does sound dramatic, but when you look at everything happening, maybe it's not an exaggeration.
It's a confluence of significant challenges hitting them pretty much all at once.
Right.
Tariffs are definitely a major concern for Apple. I mean, their supply chain is incredibly complex, globally distributed.
Heavily in the Pacific Rim, right?
Yeah.
Including India now, too.
Exactly. India's up to like 15% or something. Their whole network of suppliers, manufacturing partners, mostly over there. So they're particularly vulnerable to tariffs on imported components, finished goods.
Which could mess with pricing, how they plan new devices.
Absolutely. It could directly impact all of that.
And it's not just the potential for new tariffs. They also took a hit in court recently.
Ah, the App Store ruling.
Yeah, a California judge ruled they have to let developers use their own payment systems for in-app purchases.
Which cuts right into Apple's commission, that, 27 to 30% chunk they usually take?
Ouch. Yeah.
Precisely. And while that percentage isn't unheard of, it's a substantial cut for developers, especially smaller ones.
Sure.
It hits their profitability, maybe even their ability to innovate. And for Apple, that App Store revenue is a significant piece of their financial pie.
Then you have the Google deal risk.
Oh, yeah. The very real risk of losing that massive payment they get from Google to be the default search engine on Safari.
How much is that rumored to be? Like $20 billion?
Something like that, yeah.
Yeah.
Around $20 billion. Losing that would be another considerable financial blow.
Wow.
So losing that isn't just a number. It could directly impact, future investments in new tech, maybe even device pricing down the line.
And the list just keeps going. They're still trying to catch up in the AI race. Feels like they've got their big developer conference in June. Lots of pressure there to show something big.
Definitely. WWDC is always key. but maybe more so this year.
The DOJ lawsuit is still hanging over them.
Plus, increased scrutiny, potential fines in the EU, Korea, Japan.
And China. They really need to turn things around in that crucial market.
It's a lot. And if we connect this to the bigger picture, even in the last quarter, without any new tariffs, their iPhone revenue growth was only about, 2%?
Barely moving.
Yeah. And there's also talk that the big AI upgrades to Siri might not even arrive until the iPhone 17.
Oof. So people might just hold on to their current phones longer.
Could happen. Delay upgrades. It's a stark contrast, to see Microsoft overtake them as the most valuable U.S. company recently.
Yeah.
Really highlights the intense pressure they're under.
Definitely feels like they're navigating some choppy waters.
It really underscores the incredibly competitive and rapidly evolving nature of the tech industry.
Okay, let's switch gears one more time. Let's get a broader economic perspective from the recent Milken conference. Treasury Secretary Scott Bessent outlined the administration's economic vision, talked a lot about trade, tax cuts, deregulation, all working together.
Yeah, what's interesting there is the core idea, trying to create a more level playing field for American businesses and workers. And, encouraging more investment right here in the U.S.
So tariffs fit into that how?
In this view, tariffs are seen as a tool, maybe a lever, to push companies to invest domestically.
Got it. He also mentioned a big, beautiful bill, his words, aimed at making the small business deduction permanent.
And making it easier to invest in high tech, plus a big focus on deregulation.
Right, speeding up the permitting process for building projects. He had that slogan, build, baby, build.
Yeah. The emphasis on achieving energy dominance was another key point, as was the discussion around the historic economic partnership with Ukraine, which they see as a strategic move against Russia.
Okay.
And financial deregulation, particularly concerning the growth of private credit versus the traditional banking system, that's also on their radar.
Permitting reforms seem like a really big thing for him, though, cutting red tape across industries.
Yeah, that came up a lot. And looking ahead, he stressed how crucial it is for the U.S. to be a leader in AI and quantum computing.
Makes sense.
His view of the American dream was interesting, too. Equal opportunity for significant achievements, a system with mobility.
And did he touch on interest rates?
Yeah, he talked about the importance of a stable interest rate environment to help reduce credit risk, and made an observation that a surprisingly large chunk of the U.S. economy pulses through the D.C. area.
So all these pieces, trade, tax, deregulation, energy, they're meant to fit together in this long-term economic strategy.
That's the intended vision, yes.
Exactly.
However, the immediate reaction in the market, it suggests some underlying anxieties.
Exactly. Our sources noted that tech stocks have been a bit shaky lately, and trade concerns seem to be a big reason why.
Still.
Seems like it. Tariffs continue to cast a shadow over the chip sector, and there's just a general unease in the NASDAQ about how all this trade talk might play out.
We also heard that BNY CEO Robin Vince, also at Milken, mentioned their clients are trying to sort of understand the difference between tariffs as just a tool versus a broader trade policy strategy.
And deregulation too, right? Where is that heading?
Exactly. Plus, concerns about liquidity in the Treasury market came up again.
The need for regulatory relief there, SLR reform.
Right. And of course, the ever-present issue of the U.S. deficit. It all feels very interconnected.
It really does. The potential tariffs, Apple's specific challenges, these broader economic strategies, they're all intertwined.
And contributing to the current sense of, uncertainty in the market.
Well, this has been a pretty packed deep dive into some really complex stuff. We've covered the potential Hollywood tariffs, the multiple challenges Apple is facing, and the bigger economic picture being painted at the Milken conference.
Yeah, a lot to track.
It definitely feels like we're in for an interesting ride in the tech and economic worlds.
Absolutely. These are all evolving situations, and it will be important to keep an eye on how they develop, for sure.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.